Thanks, everyone. Well, it's a great morning to be out here talking about a gold story. You see gold's popped up to 1740 this morning, so we've got lots of it. So with that, I'll be making some forward-looking statements today about the PFS work we're doing right now. So Cangrejos, where we sit today, we're at about 17 million ounces of gold, about 2.2 billion pounds of copper. So we already have, a fairly massive project in Ecuador. For those of you who followed it, we put out that PEA study in 2020 outlining about 370,000 ounces of gold production a year, about 50 million pounds of copper production a year, a 25-year mine life, which was a vast improvement over the 2018 study. And a pretty low cost, about $600 an ounce all-in sustaining cost on the gold side of things. Now, the focus in the last 12 months has really been a 36,000 meter drill program, and the purpose of that was to infill the PEA pits to at least indicate it so that it could all be used in a PFS study and be converted to a reserve. So we expect that PFS study to be out in probably April of 2023. And we also did some step-out drilling as part of that program, and I'll show you guys where that was. And we do expect to add a significant amount of ounces to the existing resource here, although it's obviously already a very large resource. So just where we're sitting today, market cap is about $110 million Canadian. Ross Beatty is sole funding the company right now with a line of credit. He's also our largest shareholder and the founder of the Lumina Group, so he has about 20% shareholding in the company. We also have a group of about 5 Ecuadorian investors that hold 18% of the company. Management holds 9%, and Route 1 out of San Francisco holds just under 7% there. From research perspective, we got Red Cloud, Haywood, and Raymond James covering us today. So, Ecuador, we started here in 2014. We've seen kind of 3 administrations now and really a steady improvement for investment in the country. Those of you who might have seen Adventus's press release this morning, kind of just shows that carrying on. They locked in lower tax rates. They've got no repatriation of capital tax now. They've got no import duties on capital items. So a lot of these things are new things in the last, even 24 months that the government continues to improve to try to bring in more investment into country. Sorry, I'm not sure why that's doing that. But so long story short, we think the Lasso administration is going to continue to, promote mining in country, and we've signed an early stage investment protection agreement on our exploration work to date, and post pre-feasibility study, we'll come back and sign a full IPA on the project. So just where Cangrejos is in Ecuador, we're in southwest Ecuador. We're probably, in our view, the best province in country to be developing a mine. It's El Oro province, so there's no indigenous communities in this province. We're also extremely close to this port. You see at the top of the map, Port of Bolivar. That's important because they're shipping Mirador's concentrate out of there right now, so that's already set up for copper concentrate shipments. We're 40 kilometers from that, so that's a huge cost advantage for us. You've got hydropower there, you've got water for the project, so all these things help on the operating cost side. We don't have any communities next to the deposit. The closest community is about 7 kilometers away, and it's a fairly industrial area, and a lot of our property had already been cleared for cattle grazing, so not a large environmental impact from a disturbance perspective. So just the common questions we get on this, how does Cangrejos sit globally? It's the 37th largest gold resource in the world on project basis. It's the 12th largest undeveloped gold project. We think of this thing as more of a copper porphyry. Sorry, it's got an auto flip feature on right now, and it's driving me bananas. But anyway, that's all right. We think of this thing as a copper porphyry, so it's about scale, it's about efficiency. If you flipped our gold resource into copper equivalent, it's about 0.5, so higher grade than Cobre, higher grade than Mount Milligan, similar to Red Chris. So that's kind of how we're approaching this. It was $1 billion to build the project in the 2020 study, and I'll talk about what we're doing on that front right now. So similar, a bit larger than Fruta, a bit smaller than Mirador, but similar to capital that's getting deployed in the country. As I mentioned, stage-wise, PFS will be coming out in Q2 2023. So these are the two deposits here. You've got Gran Bestia and Cangrejos. This is the pits as of the 2020 study. We expect Gran Bestia to get quite a bit larger. We had stopped drilling up on this ridge line in 2019 there. We've since drilled off that ridge line and pushed out the resource into this new area to the northwest. So, you know, the strip ratio here was already very good. It was about 0.5 to 1. We think we'll be able to get that down a bit and take the ridge there. And this will be where most of the new ounces come from when we update the resource as part of the PFS. But that should improve that pit as well. The strip ratio on the two pits combined is 1.1 to 1, and that's a really key point for this asset that I'll show you in a couple of slides. So just on the 2020 PEA summary, you know, when we go to update this, we're going to look at phasing it slightly differently. So, you know, we went 40,000 tons to 80,000 tons in the PEA, and that was $1 billion to build 40,000, and then a $500 million expansion to get it to 80,000. So now in the PFS, we're going to look at going 30,000 tons a day, 60,000 tons, and then 80,000. And it'll only take an extra year to do that. So we think that'll get the initial capital down a bit. Obviously, we're fighting inflation like everyone else is. Also, there's no import taxes now on goods, capital goods coming into Ecuador, so that was 7% in this study, so that'll help a little bit. So we're doing everything we can to optimize the front-end CapEx on this. Op costs at $600 an ounce. You know, you've got lots of things helping you there. You've got the cheap hydropower, you've got subsidized diesel in Ecuador, low transportation costs, and then that strip ratio I was talking about. Just on recoveries, you know, we're 82% on the gold, 84% on the copper. Most of it goes to copper con, some of it goes to doré. We're doing a 5,000 kilo met program right now, and we'll work to optimize this and see if we can squeeze a couple extra points out of the recovery when we update the PFS. Sorry. So just project timeline quickly. You know, we finished the 36,000 meters of drilling. We got the pre-feasibility study early next year. This thing has a mind of its own today. We're going to be doing the investment protection agreement shortly thereafter and getting the terms of that hammered out with the government. We'll do the feasibility study and then all the construction permitting during basically a 2-year period, and you'd be in a position to make a construction decision on the project in 2025. So that's the illustrative timeline for the project right now. You know, this is just a lot of benchmarking. All this to say, you know, we think we're in the right part of the curve as far as production capacity versus CapEx. When this is all on our website, but if you look at, you know, our project versus you know, a lot of these ones being built on this slide, we think we're in the right part of the curve. If you get too far to the left, you know, those projects aren't getting really developed right now. So we think we still offer the scale, but at a buildable CapEx level. And then, you know, this is a key point I wanted to touch on here, and we do get a lot of questions on grade, obviously. So, you know, Cangrejos, we're 0.72 gold equivalent. So just to show you, we haven't cherry picked. We're the lowest in this set here of all these big open pit gold milling projects. If you take everyone's grade in this set and divide it by the strip ratio, which obviously speaks to mining operating costs and how much waste you're moving, we go from the worst in the set to the second best in the set. So this is a pretty key point and really unlocks the project and the economics for it. Lastly, the last two slides here are just really about valuation. You know, for those of you who are deep value investors who believe gold's going to turn here as it has this morning, you know, we've got Lumina Gold trading at 0.08 times PNAV right now. The Ecuador set's trading at 0.15 times PNAV versus the Western developers at 0.26. And I mean, I know everyone's multiples have compressed and the sector's in a tough spot, but you know, this is a pretty compelling valuation entry point. And just kind of the last sense check on that, you know, since 2017, we've increased our resource 400%, gold's up 36%, copper's up 25%, and our market cap's down 44%. So, you know, I think that's the opportunity for people who are taking a long view on these projects and the space. So, you know, in summary, Stay tuned for the PFS. We know we're in a bit of a low news point right now, but we do think that'll be another step and another substantial improvement in the project. We've got a team here with Marshall Koval, Leo Hathaway, who are have sold a lot of projects out of the Lumina Copper Group and Lumina Group before. They know how to de-risk these large porphyries and advance them, and that's what we're doing right now. So maybe with that, I'll take some questions.